Hello everybody, my name is Nick and this is LODE TV. As always, if this is your first time joining us, please go ahead and subscribe to our channel, as well as check out LODE.1 to learn more about how LODE is putting idle silver to work. And if you're already a member, welcome back. Now, big news broke this month when 3 JP Morgan Chase precious metals traders were charged with manipulating markets. However, there may be an even bigger story here. To discuss this, I have Bill Murphy of GATA, an organization dedicated to exposing the manipulation of gold and silver markets, and David Morgan, founder of the Morgan Report and one of the most prominent voices of silver. So, without further ado, let's dive in. So, for some background, earlier this month, 3 JP Morgan Chase traders were charged with a multi-year market manipulation scheme to manipulate metals prices. But there may be an even bigger story here. After inheriting the short position, JP Morgan Chase began accumulating pretty much all silver out there. They have the largest position in history. What did they know here? Bill?
Well, it's a big story. I mean, you know, JP Morgan from my standpoint anyway, lets the silver price rise in 2011 from, I don't know, 17, 18 to 50, topped out the beginning of May in 2011. 6 months later, gold topped out. And then it just dropped. And then in the last 3, 4, 5 years, whatever, they've just gone bonkers in the paper market on the COMEX. The open interest went from 135,000 all the way up in 2011 to the end to now, you know, 200 to 245,000. And it's just, they're just, you know, they and their cohorts are just been all over the paper market selling and selling and selling. And I'll let David take it from there.
Well, I don't have much to add. I mean, I agree with Bill. I don't know if it was, you know, broke out at 19. It's probably the best futures trade I ever made, certainly the best silver trade I ever made. It was in a channel formation at 19. It broke out, went to 26. Then they announced, and I got out, you know, $7 move in a commodity that's leveraged. I mean, that's a lot. And they announced QE2, and I got back in right where I got out and rode it all the way up to 48 and cashed out. I had several subscribers that freaking retired. But anyway, back on the point, I agree with Bill at the end. I don't know about all the way up, but I know from experience that once the markets get ahead of the shorts, they're always the commercials, they're always the bankers in the case of gold and silver. So they let it run. What they do is they just stand on the sidelines and let it go and see how much buying pressure there is. And then when it exhausts, like throwing a ball into the air, when it goes up to the top and there's no more buyers or very few, then they go short. And then all the longs have to cash out. So now you get a lot of short selling as the commercials are shorting when it exhausts and the longs want to cash out and take a profit. So now you get these big down moves. In fact, sometimes you'll even get a gap in the charts, but I went a little too far on that. On the JP Morgan, I think just to add to Bill, you know, I guess one of these guys was with the LBMA. Surprise, surprise. Silver took off on the news Monday, I believe it was, went up like 60-something cents, traded all day, which is very bullish. And then yesterday it got clobbered back down about an equal or maybe a slightly greater amount. I said, and I will repeat, that there's a pretty good resistance at 1850. And I've said in the past, and will continue to say, right or wrong, that we're going to see silver have to work through that resistance level. So it's been through it twice in recent memory. Goes through it again, it'll be third time. Third time's a charm or not, usually 3 or 4 tries. Once it does that and maintains it, which it will, and probably before the end of the year, I think you'll start to see the ratio come further down, meaning, you know, silver will be outpacing gold somewhat. But remember, if silver outpaces gold from that 95 top, that's nothing to brag about. I mean, just getting back into the 70, 72 range is sort of like more or less normal for the beginning of a bull market. So back to you guys.
So the counter argument that they've provided is that they're simply spoofing. They're not trying to suppress the price of gold or silver, but simply rig the market to make a quick profit. And gold went from under $300 in 2001 to over $2,000 in 2011. So they were trying to suppress the market. Aren't they doing a bad job? Bill, your thoughts?
Well, first of all, it's 2 big issues. One, you know, yeah, spoofing, I mean, big deal. Yes, in terms of making a quick profit, it could be on the long side and the short side, but that's not what got us exposed for 20 years. It's the manipulation of the gold and silver markets by the U.S. government, the Fed, the Treasury, the bullion banks, JP Morgan, other bullion banks, the other central banks, the BIS. It's a much bigger issue, and they've kept gold and silver under control and managed it. Yes, gold went up 12 years in a row, but it was a controlled retreat, and they kept wiping out the speculators en route. And then they went into a new game plan in 2011 and went into attack mode, and then it went down for 8 years, and then gold base for 6 years broke out, and silver, as David said, is way so far behind gold it's ridiculous. It still really hasn't broken out, but they both changed their patterns, the way they've been trading. Gold 4 months ago, silver about 2.5 months ago, and that ought to continue. And I think the surprise is going to be on the upside, and how far and how fast they go, we'll see. But the manipulation of the gold and silver markets is a much, much bigger issue, and we've put together 20 years of evidence to support that, and there's too much to get into.
So then where do you feel the price of silver and gold should be realistically?
Well, it's, first of all, gold's in all-time highs in 73 different countries. And of course, the manipulation is related to the U.S., the dollar, our interest rates, and it's a U.S., run issue. So we're still far away. But my goal in the not too distant future is $3,000 gold and $100 silver. I think once we do get through, David's number, wherever it is, but for me, it's 2150. It's just going to skyrocket. And you're going to see a gold silver ratio collapse from the 84 area it is now down to back to where it's been historically in the past, which, after what I just mentioned, would be 30. I know that seems ridiculous now, but that's what I think is coming down the road.
David, anything to add to that?
Sure. Yeah, I agree with Bill that I think silver will eventually, during this bull market we've reestablished, outperform gold. And whether it's 30 to 1 or 16 to 1 or 10 to 1 or 40 to 1, it's going to be lower than it is right now. I think all investors should own both gold and silver. There's different dynamics for both the metals. Gold is much more of a wealth preserver and much more stable. Plus, like it or not, the establishment really does like gold. They just never say it in those terms. But I mean, central banks have been net buyers. In fact, last year was the biggest net buy for gold by central banks since, I think, 2011 or something. So gold's more mainstream. Silver is more, the poor man's metal, that type of thing. I don't really have much more to add. I mean, Bill's done a good job of explaining that, it's all about the dollar. I mean, I said this to somebody recently, and I'll just repeat it here, and I probably get a lot of flack, but, we all talk about diversity and all this stuff, and yet the real God of the United States is the dollar. I mean, there's all kinds of religions, but everybody's got faith in the dollar, and everyone has belief in the dollar. Yet the fact is that all fiats fail, and that's the rationale that very few people even understand, believe. And yet we're sitting here by the Fed's own admission that the 1913 dollars was about 2.5 cents. I mean, if you lost 98% of the value of something, be it real estate or artwork or a rare coin or a stamp or a stock, you'd be, appalled. But it happens to the dollar. It took 100 years, and everyone just goes about their business saying we need more inflation. It's crazy.
Do you think we're headed towards negative rates in the USA? A potential collapse of the US dollar?
I don't think there'll ever be an absolute collapse. Usually what happens at the end of great inflations or debasements of currencies is that the public wakes up to the fact that it's not 100%, it's not 50%, it's not 38%. It's some small percentage that basically shuns the dollar and rather own a jar of peanut butter than hold savings in a savings account. When that psychology takes effect, then it's almost impossible to turn it back around. I think we'll see it in dollar, but it doesn't mean you're going to see negative interest rates. I think they'll stay positive. I know I'm kind of a lone wolf on that, but I've always said when everybody's thinking the same, nobody's thinking very much. One of my favorite sayings: the bond market is the catalyst for everything that's out there in the fiat universe. I mean, everybody holds dollars, even Russia, if they want to or not. Most settlement still occurs in U.S. dollars. So when it's not trusted, I think is the better question. And I don't know when that's going to happen, but will it collapse, go to zero, that kind of thing? No, I don't think it will. It's going to take so many of those units to pay your heating bill. I mean, the Social Security would be an example. someone that's on Social Security only, when that payment that they receive pays their light bill only, we're in trouble.
So we know that spoofing happens in traditional markets, but what about cryptos? Do you believe it's potentially even more widespread there?
You're not asking the right guy about that. I really don't know. I do believe that all markets are manipulated. In fact, I just read an article on Bitcoin and how it's being manipulated or purportedly being manipulated before certain dates in the futures exchange. I think with this computer sophistication that we have, there's so many ways to make money with these computers that they probably do almost any market. I'm a big believer in that. And, a lot of people say, oh, that couldn't be. I think more and more people are waking up to the fact that it could be. And a lot of those are waking up to it would be. It is happening.
That's all we have for today. Thank you for joining us, gentlemen.
Thank you.
Thanks, Nick.
That's all we have for today's interview with Bill Murphy of GATA and David Morgan of the Morgan Report. So glad that you guys could join us. And as always, if this is your first time, please go ahead and subscribe to our channel, as well as check out LODE.1 to learn more about how LODE is putting idle silver to work. That's all for today, guys, and take care.